So clearly, Donald Trump's plans to drill baby drill here in the United States, not working out. It's not coming to fruition at the moment. So Trump's advisors say that the best strategy to bring down oil prices is to persuade OPEC countries, these are oil producing countries, also known as the OPEC cartel, or organizations of the petroleum exporting countries and Saudi Arabia to ramp up oil production. In other words, he wants other oil producing countries to drill more, produce more, so we have more supply, bring costs down. There's just one teeny tiny problem. Saudi Arabia, not buying it. They're not interested in doing it because it is not in their best interest to lower energy prices, considering oil is what makes that country wealthy.
Saudi Arabia just delivered a blunt response to Donald Trump. Thanks, but no thanks. Trump thought he could strong-arm OPEC into ramping up oil production to drive down inflation and bolster his economic agenda, but that plan was doomed from the start. In this deep dive, Anna Kasparian breaks down the reality behind Saudi Arabia's grip on global oil prices, the hidden reasons U.S. oil companies are refusing to drill more despite record production, and why Trump's approach was always a losing battle. If you believe the U.S. can simply drill, baby, drill but's way out of high gas prices, think again. Anna is about to set the record straight.
And I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. You got to bring it down, which frankly, I'm surprised they didn't do before the election. That didn't show a lot of love. With oil prices going down, I'll demand that interest rates drop immediately, and likewise, they should be dropping all over the world.
That was President Donald Trump at the World Economic Forum back in January, announcing that he would pressure Saudi Arabia to produce more oil in order to bring inflation down, and that would allow him, Donald Trump, to pressure the Federal Reserve to lower interest rates. That's the plan. That's how he's going to lower inflation. That's how he's going to make the cost of borrowing lower. But Saudi Arabia is putting a damper on Trump's efforts, telling officials that it's just unwilling to augment oil supplies to bring costs down. I mean, think about it. Let's just pause for a second. Saudi Arabia is rich because of what? Because of oil. It is one of the top oil producing countries. And if you produce a lot of oil and you have more supply, thus bringing the cost down, Saudi Arabia loses money. So they kind of have a vested interest in manipulating oil prices by holding back production. We're gonna get into more details on that in just a minute, but this is how the OPEC cartel works, okay? This is how it works. It's important to understand it because oftentimes our politicians lie to us about how all we need to do is drill, baby, drill. Drill, baby, drill in America. If we're not producing enough oil. We're the top oil producer in the entire world. We're also the top oil exporter in the entire world. But we'll get back to Saudi Arabia in just a minute because first we should get familiar with what is happening in regard to energy production in the United States and elsewhere. Now, remember, Trump said this repeatedly on the campaign trail.
What is the first thing you would do to help bring down the cost to make things more affordable?
Drill, baby, drill. Drill, baby, drill. We're going to drill, baby, drill. Drill, baby, drill.
Are you? Because it doesn't seem like that's happening. And the reason why that's not happening is because America's oil producers don't want to. Okay, so this is according to the Wall Street Journal. They report that another American oil boom isn't in the cards soon, no matter how many regulations are rolled back, according to oil executives. After many producers over-drilled themselves into bankruptcy during the shale boom heyday, the industry is now focused on keeping costs down. And what do they have a fiduciary responsibility to do? Return cash to their investors. That is what they're focusing on right now.
Saudi Arabia's refusal to bow to Trump's demand for increased oil production is anything but surprising. It's pure economic self-interest. The kingdom's wealth depends on oil, and flooding the market would only weaken its own financial stability. With a budget that requires oil prices to hover around $90 per barrel to stay balanced, Saudi leaders have no reason to cut prices just to benefit the U.S. They're playing the long game, prioritizing their own prosperity and funding domestic initiatives rather than caving to external political pressure. This is the reality of the oil market. Saudi Arabia controls supply to secure its own future, and the U.S. needs to stop pretending otherwise.
So clearly, Donald Trump's plans to drill, baby, drill here in the United States, not working out. It's not coming to fruition at the moment. So Trump's advisors say that the best strategy to bring down oil prices is to persuade OPEC countries, these are oil producing countries, also known as the OPEC cartel, or organizations of the petroleum exporting countries and Saudi Arabia to ramp up oil production. In other words, he wants other oil producing countries to drill more, produce more, so we have more supply, bring costs down. There's just one teeny tiny problem. Saudi Arabia, not buying it. They're not interested in doing it because it is not in their best interest to lower energy prices, considering oil is what makes that country wealthy. Keith Kellogg, Trump's special envoy to Ukraine and Russia, has said global producers should try slashing oil prices to $45 a barrel to pressure Russia into ending war with Ukraine. Now, their oil production is one of the ways that they're still making money. And so if you produce more oil, it kind of undercuts Russia's oil production, and they're going to lose money through that, right? That's the idea. However, these insanely low oil prices would be a complete and utter disaster for Saudi Arabia. So the last time prices sank below $45 a barrel during the pandemic in 2020, it prompted a painful war for market share between Saudi Arabia and Russia and pushed dozens of shale drillers into bankruptcy. At lower oil prices, Saudi Arabia would struggle to generate enough revenue to pay for social services, monthly payments to citizens, and big infrastructure projects. It will need about $90 a barrel this year to balance its budget, according to the International Monetary Fund. Saudi Arabia doesn't give a damn about the United States. They don't care about what we're dealing with inflation. They don't care about any war in Russia, Ukraine. Who cares? They care about their own wealth and the ability to balance their own budget. And the idea of going down to $45 a barrel is ridiculous to them. It would crush them. They need to be at $90 a barrel. You guys see how this international oil market works? It's all connected. So the reason why the US is furious with countries like Venezuela is because they've nationalized their oil. Now, they do also trade or export oil in the global economy. But when you, as a country, when the people of that country own the natural resources and it doesn't belong to multinational corporations, well, then they get to make decisions about how much oil they produce, where the oil goes. They can ensure that the oil actually benefits their own people first. We don't have that situation in the United States. The American taxpayers, American people do not own our own natural resources. They belong to the oil companies, and they're going to go ahead and export wherever they please. And the same goes for other oil producing countries. And so let's get to what Trump has tried to do in order to kind of reinvigorate oil companies in America. He's been slashing regulations, right? And he's like, look, you don't have to worry about environmental regulations anymore. You don't have to worry about national monuments. I'm going to rezone things and make it easier for you to drill where you want. But apparently there are some issues there as well. So his advisors are saying that the lack of regulations, including making it easier to build pipelines, could appeal to investors. More capital flowing to the industry is expected to increase output, but not anytime soon. It's going to take a while.
Donald Trump's plan was straightforward. Drive down oil prices to curb inflation, pressure the Federal Reserve to lower interest rates, and spark economic growth. It's classic Trump. Bold, simplistic, and rooted in the belief that a strongman-style demand will force results. But the reality is far more complex. OPEC, and particularly Saudi Arabia, doesn't take orders from Washington. Their decisions are based on financial self-interest, not political favors. Trump's assumption that he could pressure them into ramping up production ignored a fundamental economic truth. Oil-rich nations thrive on high prices, not low ones. His strategy was doomed from the start because it relied on the faulty premise that Saudi Arabia cares more about American inflation than its own bottom line. The oil market isn't dictated by free market supply and demand. It's controlled by a cartel. OPEC, led by power players like Saudi Arabia, ensures its members maximize profits, even if that means keeping supply artificially low. That's why Trump's demands were met with a polite but firm rejection. And the idea that the US can simply drill its way to lower prices? That's political theater. OPEC calls the shots, and their priority is their own financial health, not bailing out an American president in search of an easy inflation fix.
And this could take many years. In fact, even with Trump's deregulation in mind, Ed Crooks, who's the vice chairman at energy consulting firm Wood Mackenzie, told the Wall Street Journal, quote, "We don't see anything that will make a colossal difference to the economics of production." Oil executives are noting that US production is already at record highs. So remember, on one hand, you'll hear Republican lawmakers and Trump himself argue, the Democrats, they're the ones who have stood in the way of oil production. We're not producing oil anymore. That's not true at all. Beginning with the Obama administration, we have been the top oil producing country in the world. We're also the top exporter of oil in the world. So the idea that we're not drilling enough is laughable. And even the oil executives are saying that, okay? Oil executives note that US production is already at record highs, but they do expect production to increase a little bit this year. The Energy Department projects domestic output will rise about 2% to about 13.7 million barrels a day by December, and then stay relatively flat in 2026. And aside from improving the US economy through more oil production, Trump also wants to slap Iran with additional sanctions, to make his daddy, Bibi Netanyahu, happy in Israel, of course. But when he does that, well, that's going to limit the global oil supply because Iran is one of the major oil producers. We don't buy oil from Iran, but China does. And if it's harder for China to buy oil from Iran, they're going to want to buy oil from other oil producing countries, thus limiting the supply for, importers of oil. And so that's going to make the cost go up as well. Those two policies are leading to some tension when it comes to Donald Trump's agenda in lowering inflation so he can then go to the Federal Reserve and urge them to continue lowering interest rates. And that's the other thing. Chairman of the Federal Reserve, Jerome Powell, surprisingly has pushed back against Donald Trump's pressure to lower interest rates. About 6 days ago, it was reported that Trump was pressuring Powell to lower interest rates, and he's noticing that inflation is ticking up again. He's like, nah, we're not going to do that. So look, we'll see how it develops. But the whole purpose of me doing this story is so people understand how the oil industry really works, how everything is tied together globally, how the decisions of an OPEC cartel member country like Saudi Arabia has a big influence on the price of oil globally. And, there are other options if we're looking for, ways to diversify our energy, how we get our energy. I know a lot of people get touchy about this, but I really do think focusing on the cleanest form and most reliable form of energy we have at the moment, nuclear, is a better option than destroying the environment by drilling more. I think it would be better than relying on a country like Saudi Arabia to produce more oil. But right now, we are slaves to the whims of OPEC cartel countries. And that's just the reality of the situation.
Producers like Saudi Arabia and Russia gain even more leverage, tightening supply and keeping prices elevated. The reality is that US oil companies aren't in the business of lowering gas prices. They're in the business of making money. Despite political rhetoric, the US is already the world's top oil producer and exporter, yet domestic oil companies are in no rush to flood the market with more crude.
Why?
Because their priority isn't helping American consumers, it's maximizing shareholder returns. After years of reckless overdrilling during the shale boom led to bankruptcies, oil executives are now playing it safe, keeping production in check to sustain high profits. The issue isn't a shortage of oil or drilling restrictions. It's that, just like Saudi Arabia, U.S. oil companies have zero incentive to overproduce and drive prices down. Trump's proposed strategies, like imposing additional sanctions on Iran, would only further squeeze global supply, making oil even more expensive. It's a contradiction in his approach. He wants lower prices while supporting policies that restrict global oil availability, ultimately handing more control to OPEC and keeping costs high. Buyers like China will simply turn to other suppliers, tightening global availability and driving prices even higher. This is how global energy economics work. One policy decision in Washington can send shockwaves through oil markets, causing price hikes that ripple across the world. Trump's inflation-fighting strategy was ineffective from the start because it ignored these realities. If the U.S. truly wants to break free from OPEC's grip, the solution isn't just drilling more, it's energy diversification. While renewables are a long-term goal, nuclear energy is the cleanest and most reliable solution available today. Yet American policymakers refuse to have an honest discussion about it. Instead, they push short-term fixes that keep the country dependent on oil markets controlled by foreign nations. As long as the U.S. relies on OPEC, it will remain at the mercy of Saudi Arabia's pricing strategies. The only real way forward is investing in alternative energy sources and reducing dependence on oil altogether. What do you think of today's video? Let us know in the comments, and thanks for watching.